We got GDP figures today, and the economy is still moving along strongly. We also got some unemployment numbers, kind of reiterating that this economy continues forward. My position remains the same. It's been the same over the past couple weeks. I'm going to be selling calls versus TLT stock. And I'm also at this point going to be starting to look to buy puts because I think we're probably going to see TLT stock moving lower, which means bond prices are going to move lower, bond yields higher. The reason this economy is still moving along strongly, the market itself is ahead of itself. And from there, the Federal Reserve is probably going to sit there and say, listen, there's no reason to move interest rates at this point. If they were to lower interest rates, that would be throwing more fuel onto at least embers that this economy is moving forward. So let me explain some of the economic data we got, what I'm looking at, and why I believe TLT stock, and of course some of the other stocks associated with Treasury yields, are going to be going lower. Let's jump into the computer. If you're just stopping by my channel for the first time, thanks so much. I'm an economist first and foremost, and I break down the economy and ask the question, how will economic indicators affect the stock market? Given that, we're looking at GDP year over year, and this shows us, this is year over year on a gross domestic. We just got the number out this morning. The economy is a little more firm than expected, although this number came in a little bit softer than some analysts had expected. I thought potentially this number could really light up the board. Fortunately, it did not, because that would really rock the bond yields, which of course would have sent stocks much lower. So imports kind of kept GDP much lower, but what we're seeing is a fairly robust economy. Consumers came out and spent. Now, I caution everybody right there. The reason why is simply this. The numbers I'm looking at and we're going to get these numbers tomorrow morning, personal incomes and personal expenditures. Those are starting to slow down. So although the consumer really stepped up in November and December of last year, or the last few months, the numbers I'm looking at for personal income, the rate of growth there, as well as the rate of growth of personal expenditures, are starting to slow down a little bit, which means the economy is probably going to mellow out a little bit. This GDP report, everybody's saying consumers spent. Great. But here's the thing. The rate of growth of personal incomes has a pretty strong correlation to the rate of growth of personal expenditures. If incomes are growing on a year-over-year basis, expenditures follow suit. And if they're declining, of course, vice versa, expenditures follow suit. So if we're seeing personal incomes kind of mellow out a little bit, we should see GDP kind of mellowing out a little bit. It just takes us a while to see that information. We did see retail sales come out last week, and 0.6%, 0.6%, 2 months in a row consecutive. How long can the consumer hold up? I'm thinking they're probably going to slow things down somewhat. Let's move forward. The next data point we got today was initial claims. A little pop higher, but nonetheless, the trend is overall down. This shows us how many people filed for unemployment insurance. Not that many. Let's take a bigger look. Here's continuing claims, sort of the same thing. Once you file, the following week and every week thereafter, do you remain on unemployment insurance? This looks a little high. It did pop up a little bit. But let's put it into perspective. This is a bigger look going all the way back to 1990. The green is the total number of individuals on unemployment insurance versus the working force, the total workforce. So it's sort of like another version of the unemployment number that we get on the first Friday of every month. Taking a look at continuing claims, this is way low. It reiterates everything. This isn't a big guessing game. The economy is moving forward. But I still believe we're probably going to see some kind of slowdown in the next couple months that might give the Federal Reserve some wiggle room to at least state we don't think we need to go higher. But I certainly don't think the Federal Reserve has any room to go lower. This is the U.S. 10-year Treasury yield. Yield has kind of mellowed out, and I expect we'll probably stick right between, say, 4.05 to 0.25, that kind of range. And this is where with TLT stock, this is one of the ones I like to play is TLT stock. It's an ETF that goes against price on U.S. Treasuries. Let's take a look at TLT stock itself, and here we are. I don't see 100 at all. I think 96, getting close to it, is a possibility, getting close to it, but I don't see us going above there. 98, probably not at all. Over the next couple, 2, 3, 4 weeks. So what I'm doing is I'm stepping in and I'm selling those calls. If we see a move upward to 96, now keep in mind next week we do get the Federal Reserve. I think they may backpedal somewhat on the comments from last meeting. I think the last meeting, the market got way ahead of itself. I expect interest rates to remain kind of flatline and bobble around a little bit. Everybody's looking for some ginormous move. That's over with. The move we saw lower in TLT stock all the way down all through October, I think was overdone. And then, of course, TLT stock moved right back upward. So probably we're getting close. Like I don't think we're going to see lower than 92, and I don't think we're going to see higher than 96. These are the ranges I'm going to be looking to sell calls above 96. And should we get close, if we get back up there, I might start buying some puts, some 92 puts, 94 puts. If we get close to the 96 level, I'll sell those calls with the attitude they expire worthless. Coffee money, a little more than that. But nonetheless, and that's sort of my game. I'm always playing for base hits. Step in when I see the market getting out of line with economics and say, listen, I can sell these options. They'll expire worthless. It's a low risk opportunity for me, and I continue to bring in that premium from selling those options. This is how a vast majority of my trading is exactly that. I will take positions from time to time. If TLT stock does move a little bit higher, I'll start looking to buy in on some puts with the idea that we see a move a little bit lower in TLT stock. But I also need to see a correlation with some of the economic data. Like I said, I think the economic data is going to kind of mellow out a little bit. And I think that TLT stock, as a result, because of that sort of mellowing out of the interest rates, we're likely to see bond yields kind of just hang out and not really move up or down. And that's when I like to step in and start selling those options. Nonetheless, if you're just finding my channel, make sure to hit that like and follow button. Thanks for the great comments. I know that when I put content up for TLT stock, it's very well received. A lot of guys really follow my content on this. The economy, much stronger than expected. The Federal Reserve likely to tap the brakes a little bit on their comments from last meeting. And I see bond yields kind of moving sideways, and that's an opportunity for me to sell options and make some money. We'll see you in the next video.